What's up, sons? It's Blind Ride with Son of a Tech once again, and today, in light of all of the hack reports I've been getting, not only from DJ Minds, who is a fellow YouTuber, but others that have also been emailing me in relation to the Exodus wallet, I wanted to make a quick video on some tips and tricks for going ahead and making sure that your wallet is secure. In fact, this is going to be along the lines of the around find out chart, and we're going to go ahead and explain that right after a word from today's sponsor. Today's sponsor is BT Miners. BT Miners has been a longtime sponsor of the channel and a proven reliable source for ASIC miners. If you're looking to purchase ASIC hardware from Bitcoin to Dogecoin miners, they are available for purchase on bt-miners.com. BT Miners is a trusted source by both ASICminervalue.com and CryptoMiner.com. Follow the affiliate link in the description and tell them SOT sent you to support the channel. Welcome back. So let's go ahead and hop right into it today. Essentially, what we have going on is going to be the idea that there are basically two areas in which you could be compromised, right? And one is going to be due to your own faults, and then one is going to be due to somebody else's fault. Now, this lines out into very convenient categories as well if we start talking about an XY axis and whether you are secure or insecure. And this really comes along down to the fact that you are basing your security or lack thereof based on essentially how centralized the wallet you are utilizing is, and as well as how easy is it to access. So let's go ahead and hop into it, and then we'll give you guys some examples here. Popping right in, as you can see, we have unsecure here at the top, secure right here, and then we have accessibility and then centralization. So obviously centralization is going to refer to everything from essentially completely decentralized, where you've generated your own keys on the blockchain, so like self. And then, of course, we're going to have full-on custodial over here, right? Now, there are technically some in between. There could be something along the lines of ZIL Core, right? Wallet for Flux and other assets, as well as probably closer to this side, something like Exodus, but I think they're pretty much exactly the same. So we'll put like Exodus here. Why are these in the middle though and not fully self-gen? Well, because they have centralized portions added to them. Exodus is owned by a company. ZIL Core as well is owned by a company. And we talked about this when we talked to, of course, Daniel Keller here on the show. There are centralized portions of this primarily due to the fact that both of these have built-in swap opportunities as well as exchange opportunities. So the swapping and the exchange side of things are correlated to a centralized entity. This brings in a point of failure for both. And yes, this does mean when we are talking about self-custodying your flux, you are actually in a compromised position utilizing ZIL Core, and unfortunately, in my humble opinion, that does knock Flux down a peg as far as its security goes, because at this point you are forced to utilize that ZIL Core wallet for the best option, and it does have centralized entities tied into it, which adds in a point of failure there, because now you're dependent on that centralized entity to basically behave in a manner that protects you, right? And you can't always be sure that that's going to be the case. Now, then if we talk about excess, let's talk about this, right? So at the very bottom here, right, we would have paper, which would mean that essentially you would have to get out a piece of paper that you have written down your private key on, that you also self-generated yourself, and this would be the most secure option, period. Of course, this is the hardest to access, and it's going to take you forever to redeem it and that sort of thing. So that is why it's all the way down here. This is basically completely secure, but also at the same time, for most people, going to be impractical, right? That being said, however, this is the case that you would want to be in for any sort of long-term hold, where you basically have something that you self-generated offline, preferably, that you then wrote down and put in a physical safe or something along those lines. Or the best case, of course, would be memorizing it, right? That's kind of what the entire idea here is for complete financial sovereignty, right? You are in complete control over it. Yes, it is your responsibility to store that key, etc. That would be the most secure option that we have here. At the very other end of this, right, would be something along the lines of maybe like Coinbase, right? So essentially we would have the Coinbase up here or a centralized exchange. So we'll say basically a custodial exchange or a custodial wallet, right? Custodial wallet, right? And so this means that essentially because you're both custodial on the centralization, right? And you're custodial on the access, which means basically all your credentials are stored in the same place that all of your crypto is stored. You're basically the least secure here as an individual, right? Now, there are things you can do to secure your custodial wallet, right? You can utilize two-factor authentication, highly recommended. Obviously, am I saying don't utilize Coinbase here? No, because you need to utilize that to interact with fiat systems, traditional finance. But you should be completely aware that these pose the most risk because they're always online, which means a hacker always has the ability to continue to try to hack your account because it's completely green and online and ready to connect at all times. You also have to worry about the people that are working for that company because it's a centralized company that controls all of that crypto, and that puts it in the most compromised position possible. What does this mean? It means utilize these full-on centralized exchanges for a single goal, and that is going to be to go ahead and convert from sometimes other cryptocurrencies to other cryptocurrencies, or from a cryptocurrency into a basically some sort of currency, like regular currency, traditional currency, like the US dollar or whatever it may be. This is the only case in which you should be utilizing a centralized exchange. And for the rest of it, it should be basically pulled out. Now, let's go ahead and talk about the next one, which would be something like MetaMask, right? And something along those lines. So MetaMask can bring up essentially your access. Well, there's two here, right? So we could go with like maybe a desktop app and then of course MetaMask or whatever. So we could say like a desktop app would be here, right? Because theoretically, you can disconnect this more often from the internet than not. And then of course we would have like a browser, right? And then these could go all the way across the board, right? Essentially, well, not all the way across because you'll have the custodial here. You have the Zelcore here kind of saying this is a little less secure if there was a Zelcore style, or Exodus is a great example, right? Because Exodus has a web wallet. So Exodus's desktop wallet would, in theory, you know, at the base of it, appear to be a little bit more secure, while the browser would be a little bit less secure, right? Browser based would be, example would be like MetaMask, right? And if you have the MetaMask plugin basically installed all the time, then anytime you have your browser open or that computer on, that MetaMask wallet is at risk if that computer is connected to the internet, right? In addition to that, the desktop, if you have a desktop app, you know, running and holding your crypto, it is more compromised if that computer is running and on the internet. So there are a few ways around this, but also it does provide more access, which means if you have more access, you can do things like trade and participate within different ecosystems a little bit better. It is purely a use case based thing. Once again, if we go all the way to the right and we're full custodial on everything, you know, basically they control our login information, they control the crypto that's in our account, they control everything, full on custodial. At that point, what you're looking to do is essentially convert into some sort of like alternate currency outside of crypto, right? You're looking at converting into US dollar or whatever it may be. Then you have somewhere in the middle This is going to be, I kind of want some access to this on a daily basis, maybe, or something along those lines, because I'm a day trader. I want to participate in basically trading DeFi or NFTs, that sort of thing. Then you're going to have your kind of your MetaMask and so on. Then maybe you have like kind of your crypto, like kind of non-custodial wallet that has some centralized exchange built into it, like ZIL or Exodus, and maybe you're utilizing that for certain things there, keeping in mind that anytime it's connected to the internet and anytime there is some sort of centralized portion to it, you are adding to that risk. And then, of course, all the way at the bottom, your long-term holds, the things you're going to want to basically hold on to for a long time and is a bulk majority of your investment here, right? That would be, for example, a paper wallet that you have self-generated, preferably offline. So hopefully this clears up some of it, because some people are trying to ask some questions. They're like, well, you know, Exodus is self-custodial. Yes, but there is those built-in exchanges that you need to worry about and how they integrate. ZIL, once again, yes, technically self-custodial, but you do have essentially that stuff to worry about as far as being connected, having a centralized entity controlling the exchange that's happening within it. And then once we kind of move on from there, MetaMask is a little bit more secure than either one of those in theory, because you control the keys. But as soon as you start connecting it to other services, then it becomes just as insecure as like a ZIL or an Exodus, if not more insecure, because as a user, you do have the ability on MetaMask to get yourself into worlds of trouble by connecting to malicious phishing attempts and so on, right? Not just phishing attempts, but for the most part, what ends up happening with MetaMask is people get phished and their private key is lost because they connected it to something malicious. This is kind of how all of this works, though. And you really need to understand that full security is going to reduce your access, right? And that is really where kind of this discussion comes into play. Now, this isn't a full overview. It's not as technical as I would like to get, but I did want to release this video so that you guys had a little bit of an idea of what was going on, and hopefully it helps some people that are newer into crypto understand what they should be looking for, at least point you in the correct direction of what you should be doing with your investments. Obviously, right here, the easy thing to say, not your keys, not your crypto. That is true. However, that is not the end all be all here. We also have to talk about being connected to the internet or having any sort of digital internet connection to your cryptocurrency. If that is there, you are constantly at risk, right? And this means the way you store your private keys as well. Why, if you generate a private key even in MetaMask and then you're like, well, I'm not going to keep that browser open. I'll, utilize Brave for my daily driver and I'll have Chrome that runs MetaMask in the background. And I'll make sure that I just keep that uninstalled, or however you want to manage that, right? Or I put it on a separate computer and I won't boot that computer up or connect it to the internet, unless you need to keep in mind, of course, that if you stored that key in a cloud hosting platform or on your desktop PC or something like that, or on even an encrypted USB drive, which we've talked about, which is a good practice, it has that potential, if it's connected to the internet, to be compromised. That is the end of the story there, right? So the more that you can keep any of your private keys disconnected from the internet, the better. The less access you have, the less access everybody else has, right? The harder it is for you to get into your accounts, the harder it's going to be for somebody else to get into your accounts. And that's pretty much how it goes. Thanks for watching. Hit the like, comment, subscribe, and down below. And I'll see you next Tuesday. For additional content that also goes into more opinionated pieces surrounding the politics around crypto, make sure you check out sonofatech.locals.com. There you can become a member for free, or even choose to support for basically additional content at $5 a month. It's helping me stay alive through the crypto winter.